What's up, traders? What's up, tycoons? Super excited for today's video. Quick update, doing some technical analysis on the market. We're going to take a look at TLT. TLT is popping today. Okay, we talked about an abandoned baby possibly forming there. We're going to go over, is this potentially just a dead cat bounce? Lots of big catalysts coming up. We have NVIDIA earnings. All right, we just got the PMI today, and then we also have Jackson Hole on Friday. So be sure to smash that like button, subscribe to the channel if you guys are new, and let's go ahead and hop right into it. So here we are on TLT, and this is our daily time frame here at the or 1 hour time frame. I'm sorry, and this is what's known as an island bottom reversal, right? Where you get the gap down, and then you move sideways here. And I don't know who else was giving you guys these levels. I've been giving you guys these levels for months now, but look how we came exactly down to 92.30, found support, and then we rallied. We ended up closing yesterday right at that 93.22 resistance level as well. And then we've gapped up here today. So this is an island bottom reversal. All right, you can see we're battling with that 94.73 resistance right now. If we zoom back out to a daily time frame, you can see here that this was the abandoned baby that we're looking at, right? You had the gap down, doji, and then we got a strong push up, closed right at that 93.22 resistance level, and now we're battling 94.73. If we can get above there, we're going to have our month to date, our monthly anchored VWAP right around 95.35. Now, this is going to be an important level because this is where institutions like to place big orders, okay? They like to do it at the average volume weighted average price. Sorry, I said average so many times, but you can see on the weekly average volume weighted price, we got sell-offs each time that we came up, right? And now we actually gapped up over it. So we completely, none of those sellers were present there at the weekly anchored VWAP. And we need to be cautious in case sellers are going to be present and we're going to get large block orders from institutions and others really pushing TLT down. Right, that's something you need to be cautious of. Now, I am going to go over some more of the fundamental and economic data videos as I usually do with the TA. But this video today is really just going to be a quick TA update. I'm going to drop one later tonight. Going over many of the big catalysts. Right, you have Bill Ackman with a massive short position on the 30-year Treasury. You have, the Bank of Japan, you have China, all right, lots of global treasury yields, a global bond market, things are aligning really well right now and been causing a lot of this pain. Now, to me, was this all just pricing in an overreaction to Jackson Hole potentially coming back up, right? I mean, when you look at TLT and what happened during the last Jackson Hole, and we'll go over here to August, and we'll try to find it real quick, August 31st. So this is right around Jackson Hole of last year. You see we consolidated and then we had a massive move to the downside, right? Going from right around the 114 to 112 area, and then capitulating all the way down here to below 92. So, really, really impressive. When we zoom back out here and just take a look at this overall structure, right? We had a clear bear pennant forming. We had this triangle pattern. Price was consolidating, and we were really looking to see if we were potentially going to move to the upside. And it was very tempting to buy into TLT at a lot of these moments, right? I'm sure, there's many people, who ended up buying into TLT maybe at moments, over here, right? Or over here even. But to me, this gap down was too much of a red flag for me to, really get into a position. As soon as we filled this gap, I started a position, right? And then we came down to the lower support levels, added some more over here. And so TLT is looking nice for me right now. But, with Jackson Hole approaching, we have to be cautious. Is this all a dead cat bounce, right? I mean, you can see we literally went oversold twice here on the daily time frame. It's a very rare occurrence for TLT to actually go oversold on a daily time frame, right? You can see it happened over here in mid-June, and we had a nice little rally. And then over here in late September, we dipped into that oversold territory, got a dead cat bounce, and we actually plummeted even further. Not trying to scare everyone and say that TLT has to break 92.30, but it's a possibility, right? If Jerome Powell really wants to come out super hawkish and spook the bond market and the equity markets, then that could send treasury yields higher and result in TLT heading lower. But for now, we are getting, some nice price action. We did have a nice bullish divergence. If you're not familiar with that, take a look how we had a low and a higher low here on the RSI. At the same exact moments, we had a low and a lower low. So, what this is telling you is that as price is making lower lows, we're actually increasing in relative strength, making higher lows, and they call that bullish divergence. It's an indicator you may see some type of bullish activity. We had that abandoned baby candlestick forming here. We're looking to see if we're going to get some bullish follow through. And we saw on the 1 hour chart that we actually got an island bottom reversal here. So makes a lot of sense, why we're seeing this move up based on technical analysis. And, we're also fighting a pretty big resistance level here at 94.73. So it'll be interesting to see what happens in the meantime until Friday. But ultimately, Friday is going to be the big day you want to pay attention to. That's going to be Jackson Hole. We talked about the treasury yields potentially going higher. This is TNX right here, okay? And so, if we zoom out real quick and let's just go to a weekly time frame so you can get an idea of, the overall structure. This, there's two ways to look at this, right? Either this is a false breakout to the upside, or we could really be starting a new bullish cycle, right? I mean, if you use a little bit of Elliott wave theory here, all right, we were to simply, just take a look. We have a 1 up, 2 down, 3 up, 4 up, 5 down, or 5 up, right? This is a 5-wave structure, right? And typically after a 5-wave structure, you get an ABC correction. Now, once you break below, most of the time, the 61.8% retracement level, which for the TNX was at 3.217. If we were to break below there, then most likely this wasn't going to be a correction and this was going to be a reversal, and we are going to be bearish below there and look to fill some of these gaps down that we have to fill, right? We talked about these gaps and they're important and they fill about 90% of the time, but we weren't able to do that, right? We got an ABC correction down towards our 61.8. And when we zoom back into the daily time frame, we got a 5-wave structure to the upside. Now, your wave ones, your wave threes, and your wave fives are supposed to be 5-wave structures. And your wave twos and your wave fours are supposed to be corrective waves, ABCs, right? So, we got the correction after the wave 5 here. And so this 1, 2, 3, 4, 5 up, which also hit the targets here perfectly for a wave 5 at 4.330. And then we started forming a reversal candlestick, right? If we were to zoom in a little bit more on this, we've ended up forming a little bit of a reversal here, and then we're starting to pull back, but we're still holding support here at 4.227. We didn't know exactly where this wave 5 was going to go. We had 4.227 or 4.330 as some of the targets to the upside. And, now what we're going to be expecting is going to be an ABC to the downside, right? And that's potentially all it's going to do is really just, extend us and retest this previous trend line here that we had. And if, after getting our 5-wave structure to the upside, right, our smaller 5-wave structure, our 1 up, 2 down, 3 right here, 4, 5, and we get this ABC, then we'd be looking for another 5-wave structure to the upside. Now, that's not a guarantee. That's just a possibility, right? I mean, it's very possible that this simply just turns into a double top, right? I mean, and if that's the case, then we're going to see yields start to drop, here soon. And this would be our double top essentially, right? But what we need to be cautious of is this going to be a cup and handle, right? After we get our 5-wave up and then we get this ABC correction, essentially that would form a little bit of a cup and handle. And if we break out past the 4.330, it's very possible the 10-year can head up to 4.75, 4.6, things like that. And a lot of people aren't ready for that, right? I mean, they're just simply not ready for that. But ultimately, for this to actually turn into a true double top, right, with a top here and a top here, we would need to break the neckline, right? And so the neckline would be right around this level here. And that's when you would get your double top / M pattern, right, where you have to move up. Okay, then you get the double top and then you break through that neckline and you get your M pattern. And that would take the TNX back down to fill some of these gaps down that we have below 3 on the TNX on the 10-year treasury yield. When we take a look at the SPY real quick, we'll jump into the S&P 500. We can see the S&P 500 is rallying right now. We go to our 1-hour time frame. All right. And, take a closer look at things. We are starting to break out from a recent trend line, DTL that we've had a down trend line. And, it's not a insignificant push. Okay. But what we need to be cautious of is, again, this being an A wave down, a B wave up, and then a C wave down for the overall correction. Right. If we were to go back down to the or go back up to the daily time frame, You can see we have this nice rounded top over here. And oftentimes when we get these rounded tops in the S&P 500, you tend to see an ABC correction, right? You get an A down here, B up, and then C down. And then we start the new bullish cycle, right? One, two, three, four, five. And now, hopefully this is making sense to you guys, right? So let me try to draw it for you. All right. So here we got A, B, C down. Okay, then we got one, two, three, four, five, right? And now we're looking to see, is this potentially going to be a one down or a down, B up, and then C wave down to take us towards our trend line that that we haven't tested in a very long time, right? It's been a long period of time since we've tested this trend line, right? It's based off of the October lows, and we tested that trend line in March. And with this bump and run pattern here with our prevailing uptrend and then the bump up in price, oftentimes you will see this correction and this move down, towards the bottom of the trend line, potentially even breaking through that trend line, which would be really painful for the S&P 500. Now, if Jackson Hole is going to be bearish, right, then here's our A wave, and now we're getting this relief rally. But if Powell is to come into the market and crash the markets, then our wave D is going to be topping up here very soon. And that's when we would look for the C wave down. Ultimately, if we can break below this prior resistance, which has been newfound support many times, that's going to be right around 432.50, I believe is the level. Yeah, 432.50. Then I think it's very possible that this is an ABC correction and we're getting that move down lower to the 420 to potentially even 425 area. That's kind of what I'm seeing right now in the market. Hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel. I started a completely free newsletter with trade ideas and setups. And if you guys are fans of, free valuable content coming directly to you, I highly recommend signing up for that using the link in the description or the comment section down below. It's a good way to help support the channel as well. And, I think you'll really enjoy the content in there if you guys are fans of investment intelligence. And if you feel like or describe yourself as an investor or a trader, it's going to be good content for you.